Hello, everybody. Thank you for joining our webinar. This is Erik Daly speaking. I'm a member in Miller Johnson's Corporate and Mergers and Acquisitions group. I'm joined by my partner also in the Corporate and Mergers and Acquisitions team with a focus on tax issues, Neil Williams. Today, we plan to discuss the federal stimulus package that has not yet been put to a vote on the Senate floor. We scheduled this webinar last week when it was anticipated that we would have a final bill to summarize and talk through. So instead of doing that, today we'll be covering the broad contours of the legislation and some of the sticking points that seem to be the final pieces that are holding up a vote on the bill. But before we get to that, we'd like to just briefly introduce a few things that have happened over the last 24 or so hours, just to level set and keep people on the same page about where things are moving with respect to coronavirus and its impact on the economy and society really as a whole. So things are obviously moving very quickly here. The latest development in Michigan is in about an hour, Governor Whitmer will hold a press conference where it's anticipated she will announce a shelter-in-place type order and an order to stay in essential and non-essential businesses that may or may not be able to operate at different levels and in different capacities. So we obviously will be watching that closely. We already have Miller Johnson attorneys working closely on those issues and helping clients to figure out how to define whether they qualify as an essential business. And in a lot of cases, we're finding that they are. So we'll be in touch with a client alert immediately after that press conference. Other developments, Ohio adopted a similar stay-at-home or shelter-in-place law yesterday. The National Guard's been deployed in at least 3 states, California, New York, and Washington, to help with coronavirus efforts. And I think there are at least 6 or 7 other states at this point. It's moving so quickly, it's hard to keep track that have adopted shelter-in-place orders. So that's what happened yesterday. And then this morning, we've seen the Fed announce essentially unlimited bond purchasing capacity in advance of hopefully a vote on this legislation for a broader economic stimulus package. So those are some of the latest developments. We will obviously keep folks posted through client alerts as relevant and as newsworthy events happen. Just to repeat what we said at the outset of many of these webinars, at Miller Johnson, our approach and mindset to this is to help mitigate the fallout from this crisis by working together with clients, with government, community organizations, other professionals, chambers of commerce, because we practice and live in a community that prizes that kind of collaboration and that values intellect, loyalty, ingenuity, candor. So you should know that those are our guiding principles each day as we navigate these uncharted waters. We can't stop what's coming, but we can adopt a constructive mindset and recognize that our shared sensibilities toward our coworkers, employees, business partners, local economies, and principles of law will help us all get through this. So with that said, why don't we move on to the substance of today's webinar? And I apologize in advance if some of this becomes outdated as I speak. But our agenda will be looking at business liquidity programs, federal, state, and local government relief. In some of the provisions expected to impact individuals and families, tax proposals that are likely to be included, and then some other factors and considerations related to this legislation that will hopefully get voted on today. So let's move on to the business liquidity programs aspect of the legislation on the next slide. So you'll see there are a number of items in brackets here because the dollar amounts, although I think widely agreed in terms of order of magnitude, obviously not been finalized because the legislation hasn't been agreed in principle or voted on yet. But it's looking like there will be on the order of $425 billion available for loans and loan guarantees that'll be managed by the U.S. Treasury. My understanding is that these loans will be administered more in the nature of, you know, your typical SBA type loan, so it won't be necessarily a loan directly from Treasury, which is a little bit different than the Small Business Administration disaster relief type loans, which are direct from Treasury. So we'll see how this plays out, but it may be that there are banks and credit unions that participate as intermediaries in administering some of these loans, especially at the small business level. For the larger businesses, it probably will be the case that Treasury is a direct lender. The biggest issue clearly in the negotiations is the negotiations between congressional leadership on both sides of the aisle is the discretion that Treasury has over how these funds are directed and used, and what kind of constraints or limitations or conditions come along with that, as well as how much visibility there is into which companies receive funds from Treasury or participate in other programs. Some of the sticking points related to that have been, you know, restrictions on stock buybacks for some period of time after a business participates in this program, to what extent there are employee retention requirements. I believe in earlier version of the legislation, there was a requirement that participants must seek as much as to the maximum extent practicable to retain at least 90% of their employees. And there's some discomfort among the Democratic caucus that was not a strict enough requirement, and that there should be a harder requirement in terms of employee retention. And then this last point here, $4 trillion in Fed liquidity to support the economy and broad-based lending programs. We'll see how that plays out. I think, you know, we've already seen this morning that the Fed is basically saying there's going to be unlimited liquidity to do bond buybacks. Let's move on to the next slide. On the small business front, this is apart from, or I should say additive to the part that I just mentioned for the $425 billion. There would be an additional $350 billion in small business retention loan guarantees, and these would be the ones where it's most likely where there's some intermediary bank or credit union that gets involved in underwriting the loan and getting the guarantee from Treasury or another government agency. And these loans would be made available to support cash flow, to retain employees, keep up with overhead. And at least in the the reporting on these loans, it was indicated that there would be forgiveness of these small business loans if the borrowers retained their employees throughout the duration of the coronavirus crisis. So in that case, it would really look more like a grant than a loan, although there's a fair amount of uncertainty on what that means, whether it means some borrowers who have already laid off employees wouldn't be eligible for that forgiveness, for example, because they haven't retained employees throughout the crisis, or if that would just be moving forward from the time that the program is established and the bill is adopted. So I'm sure there will be issues that come up out of that requirement. I think we covered the last bullet point there already. So let's keep moving through the slides. In addition to those programs, which are kind of discretionary, they'll be available kind of regardless of industry, and sort of split up between Treasury on the one hand, having the broad latitude over the $425 billion, and then the separate program, or the additive program for the $350 billion for small businesses. There are some specific, it looks like there will be some specific funds that are designated for particular industries. So $50 billion for passenger airlines, $8 billion for cargo air carriers, $10 billion for airports, $17 billion for companies that are critical to U.S. national security. So think, government contractors who are supporting Department of Defense initiatives or other national security objectives. It could be cybersecurity, potentially, those types of things. And then this last bit, the $100 billion for healthcare providers and related initiatives. This is another of the pieces that seems to be still open on the bargaining table, with, again, the Democratic caucus looking to increase this amount, amounts available for hospitals, veterans healthcare, frontline workers, vaccines, therapies, diagnostic research, and then some funds for the CDC itself. So we'll see. I would expect that number would probably likely increase in the final bill from $100 billion, and there may be some additional bullet points that ultimately come up for how those funds are deployed. We can keep moving from this slide. At the federal, state, and local government level, they're talking about a $250 billion expansion and enhancement of unemployment insurance funds, which would, go make its way to the state and unemployment insurance funds. In addition to that, there would be some sizable, something on the order of 186 to 200 billion in stabilization funds to help shore up state and local government budgets, which will be hit as commerce decreases, and for a variety of reasons, they won't be able to collect as much as they normally would, obviously, and in taxes to fund state and local governments. So the bill is anticipated to include a substantial amount to help stabilize those funds. In addition to that, 10 billion in block grants to states, 18 billion for education split up between K through 12 and higher education, 5 billion in additional funds for FEMA's disaster relief fund, 12 billion for the Pentagon, which would, I think, be in addition to the funds directly for companies that support national security initiatives, and 20 billion for various public transportation initiatives. Let's keep moving. So those are the main bullet points. Those were the main bullet points as it relates to businesses, large businesses and small businesses, as well as kind of the business of operating government and budgeting for government, balancing the books of state and local government. And then you move to individual and family issues. There's currently there's about 250 billion in total estimated to be set aside for direct payments or direct deposits for individuals and families. This would likely be means tested, and the numbers that were floated yesterday for a quote unquote average family of four would be a payment of approximately $3,000. The range where you would start to not receive these direct payments, I believe, is in the mid to upper $90,000, and a family with income on the range of say $70,000 or so on an annual basis would get the full amount. And there are some nuances here that I'm sure will be worked out. The alternative to that approach of means testing initially, which it doesn't look like it's getting traction, but was discussed, was not means testing initially and just having payments made or deposits made of a uniform amount per person, and then essentially means testing in a subsequent tax period by taxing higher income individuals to essentially recoup some of the funds that they might not have received if they had been means tested originally. And the argument for that would just be for the sake of efficiency, not having to go through this process of determining and calculating who's eligible for what. So we'll see how that plays out. And other things that have been put out there potentially as items that might get addressed in this bill are potential benefits directly for frontline health workers and other sort of first responders beyond what's summarized above. And then I think Senator Warren floated the idea yesterday of increased Social Security benefits on the order of, I believe, $200 per month for those on Social Security right now. And so we'll see if any of those concepts do in fact work their way into the final legislation. Okay, let's move on to the next slide. Okay, tax proposals. I'm going to turn the virtual microphone here over to Neil to talk through some of these items.
Thanks, Eric. And the next couple of slides here, we've listed out high level the tax provisions that are being considered as part of the bill. I'll tick through these as everyone will see. It really is sort of a potpourri. They've kind of shot across a lot of different areas of the tax code, similar to the points Eric talked about on business liquidity programs and what they're doing from a general non-tax perspective. The overall goal, when you really read through what's being proposed from a tax perspective, is to find more ways to get taxpayers liquidity. So that you can see the first couple slides here are more, or the first couple bullets on this slide go more towards the immediate liquidity of businesses. So by doing things like postponing, the bullet here says corporate estimated tax payments. Looking further this morning, it looks like they're also contemplating including an extension of individual income tax payments. If you were following last week, that our typical April 15th tax day and whatever payments you might have been making on the 15th, including payments due for full year 2019 tax returns and payments of first quarter 2020 estimates. Those have already been pushed from April 15th to July 15th. And what they're proposing here would be to push those estimated payments at least further until October 15th. They're also talking about postponing the employer side of payroll taxes. So FICA FUTA and paying those out over 2 years. What's being proposed right now is that employers can simply stop withholding those taxes, and then they wouldn't be liable to pay the first half of what they did not withhold until December 31st, 2021. The second half would be due December 31st, 2022. Third bullet, they're talking about allowing the carryback of net operating losses from 2018, 2019, and 2020 to the 5 prior years. The ability to carry back net operating losses, if you remember, was something that was written out of the code in the 2017-2018 tax reform that President Trump enacted 2 years ago. This would repeal that prohibition on NOL carrybacks for those 3 years, so that taxpayers would have the opportunity to file amended returns now and get a refund soon. They're also talking about modifying pass-through loss limitations so that individuals sitting above pass-through businesses can get a similar benefit on NOL carrybacks generated by the business. And they're proposing accelerated payment of AMT credit carry forwards. This is another area that relates back to the Tax Cuts and Jobs Act of 2017, and is an area where it gets into technical rules, but it was a large number of taxpayers had significant AMT credit carry forward impact, and this would reverse that impact. Going on to the next slide, another issue that was created by the Tax Cuts and Jobs Act that's commonly referred to as the retail glitch. That would be fixed by allowing certain taxpayers, primarily in the hospitality and restaurant industry, to immediately expense building improvements. They're also talking about relaxing limitations on interest deductions that were enacted under the Tax Cuts and Jobs Act. Under that act, there was generally a limitation on interest expense that could be deducted by businesses equal to 30% of their income. The proposal is to increase that limit to 50% of income. The next bullet is a proposal to suspend most aviation taxes, excise taxes, through at least December 31st, 2020. And also, and this would be particularly relevant to individuals, there's a proposal to waive the 10% penalty on early 401k withdrawals for anyone making a withdrawal for a reason that is related to coronavirus. Individuals will be able to take a withdrawal of up to $100,000. You would not be subject to the typical 10% early withdrawal penalty. You would still have to pay income tax on that withdrawal, but the proposal would allow you to spread that income tax hit over 3 years, and would also allow individuals to eventually put the full amount withdrawn back into their 401k in later years without being subject to any caps on their ability to put the money back in later years. And finally, the last bullet on this slide, there's a proposal to allow individuals who itemize or who do not itemize a $300 charitable contribution deduction for 2020, meaning that if you're someone who does not itemize, so you more or less lost the benefit of taking your charitable contributions as a deduction at the end of the year each year, you can now make a $300 contribution and get a deduction on your personal tax return for that. Okay. Eric, I'll pass back to you. Yeah. Yep.
Thank you, Neil. I want to just address a couple of questions that have come up, Neil, while we're still talking on tax issues, because I think they relate in some ways to tax considerations. One question was, how does the government plan to gather eligibility and direct deposit data? So for eligibility, what I've been reading is that they're going to look at 2018 tax returns to look at the kind of the means testing eligibility. For direct deposits, honestly, logistically, I'm not certain how that would work at this point and how they would collect that information. So I don't have an answer to that aspect of the question, even from the speculative reporting. And then there was a related question about, filing, if you're filing as a single individual versus married and filing jointly. So I do believe that the reporting is that those thresholds would, adjust proportionately for for married people who are filing jointly. So if it's $75,000 amount for the phase out, where the phase out begins for an individual, then I believe, but obviously this is all subject to getting the final bill, that would be $150,000 for somebody filing jointly. I don't know, Neil, do you have anything else on those points, or have you read anything different on the tax side for those issues?
No, that's what I've seen as well. My understanding is like yours, Eric, the plan is to look at 2018 income tax returns for purposes of determining eligibility. The same questions have been raised. If anyone remembers, last time we issued checks to taxpayers as part of the 2008 market crash. That took, I think, three or 4 months from the date that the plan was issued until people were actually receiving their checks. Treasury Secretary Mnuchin has been pretty adamant that he wants, if we do this, that he wants to see checks being cut within 2 to 3 weeks. But there hasn't been a good plan that's been laid out, how to bridge that gap between, when we want these things to go out and just the realities of what it's going to take for the government to get the data that they need and the individual information that they need to actually, get things underway and get checks in the mail, or direct deposited. But either way, there's just not. We haven't seen, or I don't think anyone knows exactly how, the ends can meet the means here.
Right. Yeah. Thanks, Neil. So then we're going to keep it probably to about half an hour today, just because we don't have a final bill to talk through yet. And on that point, once we do have final approved, agreed language on this legislation between the Democrats and the Republicans in the House and the Senate, we will have another follow-up webinar where we go through and actually talk about the final language and some of the issues that may come up out of that, or things that are not on our radar right now or drop off our radar, so that we can stay current. But some other factors to consider right now, just based on the reporting and some of the public commentary. Treasury Secretary said that this particular bill, this hypothetical bill that we've described in the webinar, is based on a 10 to 12 week sort of crisis scenario based on coronavirus, and that the administration would go back to Congress at around the 10-week mark if things are still as dire as they are now. The total estimated cost of this hypothetical bill is in the $1.5 to $2 trillion range, and my speculation is that it'll be probably more than $2 trillion by the time everything gets negotiated into a bill that actually gets approved. All right, the vote for continuing to progress the bill through the Senate, there's I believe, a cloture vote scheduled for 1 p.m. today. There are people will be back on the Senate floor at noon, and then unless they push this vote again, a procedural vote will happen at 1 p.m. To keep things moving. Although there were 2 votes scheduled yesterday at 3 p.m. and 6 p.m., both of which obviously did not move things forward. They took the vote in one case, but it didn't pass. I believe 60 votes are needed to move things forward, and the vote was 47-47, I think, because the Republican caucus in the Senate is actually down 5 people right now who are in quarantine, and there's no means for them to vote electronically or otherwise. So I think we've got about 95 people right now, 95 senators who can actually vote on the floor of the Senate And of those, you would need 60 to continue to move this. So it'll need to be a bipartisan effort to get it done with at least, I guess, 15, 53, 5, 8, there was at least 12 Democrat senators joining with the full Republican caucus to move things forward. And then on the House side, during some of the kind of brinksmanship that was going back and forth yesterday, Speaker Pelosi indicated that she was going to be presenting, the Democratic caucus would be presenting a separate bill that might have some overlap with the Senate bill that would potentially originate in the House and work its way through the House process. So we'll see if anything happens on that front, or if this can hopefully be resolved without having two separate bills working their way through over the next few hours here yet today. So that's what we've got right now, and hopefully we'll be able to come back with some more definitive information in the near term. If you have questions about any of this in the meantime, obviously you can feel free to reach out to us. It's a fluid situation. You can look for updates on this and also on the Michigan specific issues related to the expected executive order from Governor Whitmer later today. And I know that we will be having a webinar this week as well, more focused on the SBA programs and availability of loans through the SBA, as well as state of Michigan small business grants and loans, and whatever additional small business liquidity programs are ultimately included in this federal stimulus bill. So you can look for that, and an invitation to join that webinar later today as well. Neil, anything else before we depart?
No, nothing else from me. We'll just watch to see what happens, hopefully later today.
Yeah, indeed. Okay, well, thank you everybody for joining, and hope you have a good rest of your morning, and good luck. Feel free to reach out with any questions or comments. Thank you.
Thanks, everyone.